Hey guys, how are you doing, traders? Welcome to Stock Talk on May 22nd. It's currently 5:17 p.m. Eastern Time. Thanks everyone for all of your ticker submissions, and generally, this is the format of our Stock Talks, especially if you are new. First, we go over the markets by looking at SPY, and then we look at commodities, and finally, we do go over around 5 to 10 tickers that you guys submitted. So we're going to try to average around that area. So thank you everyone for subscribing to this channel. If you guys do find these videos helpful, hit that subscribe button or that like button. So let's get started. SPY on the 180-day chart, which tracks the S&P 500, and here we are, right? We talked about SPY having a support area around 270 to 271, and we know that SPY has been bullish for 8 days straight. This was last week, and that the markets needed to breathe. Note on the 50 SMA and the 20 EMA that we're still pointing higher. So even though we had a down day today and we had the Dow going around 178 points lower, this was just a simple kind of retracement back to the 20 EMA. Note that what happened earlier, this was last week, we did retrace back to the 20 EMA. We actually fell back and retested this support, 270, 271, before we climbed back up. So there's a couple of scenarios that can play out. I'm still bullish in terms of market trajectory in the near term. At least given today's move, we shouldn't be too surprised, because yesterday's video, we did talk about a retracement back, right? We talked about how the markets would, I wouldn't be surprised if it started pulling back before we go back up. Does it mean that we will hit 270 to 271 and retest that area? It could, but it doesn't have to, right? It doesn't have to, because we can correct near this area before we get pulled back up, or we can come back down and start retesting this area before we get pulled back up. So right now, we're just, if you guys are looking for an entry to the markets, this is the time to kind of eyeball your entry into the markets, because if you guys start buying near 270, 271, this is where you're closest to risk, and then if we're wrong, you guys can just stop loss out. But if you're right, you guys can still ride it all the way back up and continue that bullish stance the markets are providing us. Looking at TVIX, which tracks volatility, we do see volatility slightly climbing today, and know how volatility on the 180-day chart has been pretty much making getting rejected at the 20 EMA, which is depicted by the light blue line. Note, once again, we're at the 20 EMA, and we can still get rejected at this point should we see markets going up again tomorrow, or going up tomorrow. If we do see markets continue to collapse a little bit, we can still see volatility, going slightly a little higher. You can see that we did break above the 20 EMA, so it is possible, but is this something that we would actively invest in? So the answer to that would be no, not right now, right? You guys can imagine how this is just a steady fall, and we just made actually a 180-day low yesterday, and right, so this is just something to be cautious of, but not to enter right now. You guys might be asking, well, we're pretty much at a support right now, should I start buying in? But remember, volatility tends to fall easier than as markets start pushing up. So you guys can imagine SPY or SPY has not made up half of its losses, right, from its previous high, but we see volatility already falling below its 180-day support. So you guys can see that volatility falls faster than the markets, start kind of recovering. So this is kind of a dangerous one to enter in if you guys are thinking about entering right now. Looking at commodities, which start with 4/CL, which tracks crude oil futures. So we looked at crude oil in terms of its bullish streak, and it is still continuing to be extremely, extremely bullish. As a matter of fact, I think that today's drop provides us a pretty good opportunity to start going in back into GUSH, GUSH, which follows crude oil futures. So look at crude oil. You guys can see that pretty much this is a very nice steady uptrend with no signs of reversal. Right now we're heading back to the 20 EMA. Look how we did get pulled up over the 20 EMA. This is a pretty good sign for crude oil. Again, it can still come down a little bit before it starts doing a U-turn back up. So if you guys are looking for a position right now into GUSH, this is certainly a good time to start looking at a position. Looking at GUSH right now, we do see it, we do see this massive sell-off today on the 180-day chart, and we see it kind of pulling a little below the 20 EMA. So again, this is why we're looking for a good entry into GUSH. We don't have to enter right now, but look at this, right? Look how nicely we're kind of forming. You know, if we can validate this at the support, we can see /CL continue to push up, then we can expect GUSH to continue to push up. So yeah, this is one to eyeball for sure. Looking at the 3-year chart, let's take a look at the 3-year chart. Note that the week hasn't closed yet, and we've broken out, right? Crude oil has a clear breakout signal, but right now this candle doesn't look very enticing. Doesn't mean that this candle will end like this in the end of the week. You know, crude oil has a good chance to still go up. So this is just something to watch out for because things could get interesting because crude oil has been bullish so long. But I do still expect crude oil to rebound at least from this area and at the very least retest $47. But I do see this pushing higher sometime in the near future. Okay, look at /GC, which tracks gold futures. Now, gold is another interesting kind of case right now in which we do see gold support around 1286. This is just like a support that we made this time around. It hasn't really validated the support in the past. We know that gold can get rejected pretty much at the 20 EMA. So let's right there. So we can see that gold, right, it kind of pushes up over the 20 EMA and then gets rejected. Note how we're pushing, kind of slightly pushing over the 20 EMA, and now we're coming down a little more. We are looking for support around 1267, so there's still potential for gold to continue falling. And you guys can see that with gold, JNUG or JNUG, which follows gold futures, even though it declined a little bit with gold, JNUG went down 3%. So you guys can see how we've been making this higher low, and you know, gold has been making this trend. So we're looking for /GC to either start reversing at that area, which is, this is more like a 50-50. You can't really tell right now based off of that pattern, right? Or if you want to just think, okay, JNUG, we're back at the support, we'll buy in right now and set a stop loss a little lower. I wouldn't mind that too much, but just be cautious because /GC does have a little more room to fall. Looking at /NG, we have /natural gas, and we've talked about natural gas being bullish, right? You guys can see that natural gas has been making higher highs, and certainly it has been making higher lows. This confirmation of a higher low we've talked about for quite a long time, actually. I'm going to start removing some of these trend lines because it's starting to play out the way we kind of expect. So you guys can see, let me just zoom out a little bit, that if I just do this kind of trend line right here, it doesn't mean it's going to reach all the way back up, right? We can be even a little more conservative. It doesn't mean it'll go all the way back up, but you guys can see that how natural gas has pushed over its resistance around 2.842, and notice the way we pushed over, right? We pushed over significantly, really quickly higher. So if we can start validating as the new support, we do see natural gas with higher prices to come. And this is a good pattern. This is the time to look into you know, especially when it starts declining, this is the time to look in the ticker UGAZ or UGAZ, which follows natural gas. Remember, we always want to invest in things that are going uptrend, not downtrend, and this is reflected the same way, right? 63.53 was a previous resistance, and now we pushed over the resistance. Why was this such an important number? Because look at this, right? We talked about on the 180-day chart, in the last 4 months, this was pretty much the resistance, and this was the high. All of a sudden, we pushed over this high. This means that look how much room there's to cover now. Right? There's plenty of room to make up for natural gas. This is the time to look for an entry position, I think, into natural gas. Look how we validated the 20 EMA, validated 20 EMA, and now if we do come down and validate this as a support and the 20 EMA at the same time, that's a great sign, I think, for natural gas. So this is just something to watch along with crude oil, and yeah, you guys can see those positions are very enticing right now. So let's take a look at a couple of tickers you guys called out. Hey, Luis, can I do analysis of BAP if able? Of course I'm able to do it for you guys. So here's BAP, or Credit Corp. So it looks like BAP is one that you guys can see that how it's been holding the 200 SMA, right, as a support. Look how we held it here, held it here, held it here. We attempted to hold it here, and this one looks a lot like the ticker PAYC, but right now what's really concerning about this stock is look how the current downtrend and the 20 EMA, we've gotten rejected at the 20 EMA, and look, we've pulled another rejection candle right now. So this means that, you know, we know that 200 SMA, we know that it can dip below the 200 SMA, but because it's currently on a downtrend and it's currently getting rejected at the 20 EMA multiple times, this is the downtrend that we're looking at, and this is not something that we would actively want to invest in until we can see some sort of revalidation of the support, until we can invest back higher. Know how also we did like a double peak here, right? Showing that we pretty maxed out on this stock, at least for now, and that we haven't made any clear like higher highs. It's currently coming back down. I can almost argue that this is a good short sell opportunity because we made this double peak and now we're on the bottom going down. And especially if we do not start catching the 200 SMA like what we're doing right now, you guys can take a short sell position. If you're wrong, you know, make sure you just set your stop loss a little higher. But if you're right, then, you know, look how much it can drop if it doesn't hold the 200 SMA. We can certainly see a decline on this one. Okay, so great analysis. Hey, Maya. Sorry, I can't pronounce your first name, but just curious, will you follow UWT instead of GUSH? UWT, so yeah, I did take a look at UWT, and I think it follows crude oil. I think this is one that you can certainly go into as well as GUSH. So it just, you know, it's only your preference, right? You guys can see that this has been a steady uptrend, and that even though GUSH went down 7%, this one only went down around 2%. So let's see, this is trading at a 3 times multiple. So this is something that you can go. I think GUSH might fluctuate. You can see that the volatility for GUSH can fluctuate more than UWT. So this one does seem a little safer than GUSH, right? You guys can imagine how GUSH went down 7%. If you only lost 2% today, you'd be totally comfortable, I think, or way more comfortable than being GUSH. So good call out, and this is something I would, yeah, same analysis for crude oil. As crude oil does, you know, manage to recover, or if or when it does manage to recover, UWT is the good one to go into. All right, JWN, would you look at RRD? What would you wait for as a confirmation before entering? So RRD, let's take a look. And okay, so RRD holds an interesting pattern. This pattern almost reminds me of WDC or Western Digital, which we talked about in the past. It's that it's making this lower low, right? It's making this lower low. Ooh, something's concerning, right? One thing that's concerning is look how we've been making lower low and we haven't hit the low yet. Yes, we kind of popped above the 20 EMA, but we can easily get rejected and come back down and retest this low. At the same time, we're also making this slightly lower high. So I agree, this is a, you know, there's definitely potential in this one, right? There's like 20 something potential, but we don't have a confirmation of reversal yet. I wouldn't argue that this is a confirmation just yet, just because there's plenty of time to go in should this be an actual confirmation. But remember, they're making this lower low and really haven't tested the low this time around. So I wouldn't want to go into right now until maybe if it does start validating the 20 EMA, you guys can see that it validates the 20 EMA as their support, that's when we can go in. Or if we, you know, if it comes down, which it probably will or can, has the ability to, then go back in when it starts trending back up. That's a more enticing position. Right now, you can imagine if I got in right now, you know, would you be able to sustain an 8% or 9% loss to your account should it start going down? That's a question for you to answer. So there you go. Trader Princess, hey, welcome back. I think I've seen you quite a bit of times. That's awesome. So breakdown of LABD tonight. So LABD is the inverse of LABU, I believe. And I see what you're seeing in that we see a support around $27.10. But just remember, look how this is holding a horizontal pattern. We have the potential to break back up, right? But generally, as markets start pushing higher, and if SPY does manage to start breaking those major levels of like 272, 273, 274, we do expect biotech and some ETFs, you know, those ETFs that are more bullish, to push higher. So since this one is more bearish biotech, this one can still break the support. Which is why we would like to go into an entry position into LABU when it's lower instead of LABD when it's lower, because the chance of breaking support is slightly higher. It's a kind of like a similar mentality to TVIX, I think, except TVIX, it's more of a downslope. It's even more riskier, whereas LABD, at least you have some time to recover because this is biotech after all. So, all right. I think that's it for this video. Thank you everyone for watching this video. If you guys like this video, hit that like button, subscribe to the channel. If you didn't like it, I hope you like it in the future and find these contents helpful. And I'm just doing it for all of you guys. And if you guys are making money off of these tips, right, these insights, in the end, it's all your decision. But I'm just trying to aid you or help you in that process to make the best comprehensive decision possible. So thank you once again, and I will see you guys tomorrow, Wednesday, for another Stock Talk. All right, see you guys later. Happy trading.